election is one and done after a grand slam from Donald Trump and the Republicans. I guess only the future will tell how that will impact the world economy and also the debt collection figures in the Nordics. But we will leave that for future webinars to disclose. So for now, a warm welcome to an update from us in interim Northern Europe. Over the next 20 minutes or so, we will cover the development in the Nordic countries when it comes to credit management and debt collection figures. And to do that, I will hand over to our chief analyst, Morten Trasti.
Thank you, Stian, and good morning across the Nordic region. For the next 20-25 minutes, we will go through the development in the Nordic debt collection data. As you might be aware of, we are the market leader in all 4 Nordic countries, so we have a good understanding in our data at what's going on the debt collection side. So the cost of living crisis, as you might know, are fading quite fast, and it seems to blow over without any serious consequences, at least not from a macro perspective, but the costs are still to be counted as debt collection and credit defaults follows the tail of the business cycle. So even if the business cycle looks much stronger now compared to a year ago, and the future looks better as well, well, we do not know the full extent of the cost created by the cost of living crisis when it comes to credit defaults. So the household sector has been under severe financial pressure for some time. And when we look at that development, starting by looking at inflation, there's quite similar movements across the Nordic region, where inflation started to increase faster and faster during the start of 2022, reached a peak on New Year's Day almost in 2023, and has since come down, and inflation is now pretty close to the long-term target in all 4 Nordic regions, hovering around 2 to 2.5% annual growth. So inflation pressure are indeed easing. Looking at economic growth, the overall picture is that the economy is moving sideways in Sweden and Norway. It's a quite healthy development in Denmark, but that is mainly due to the pharmaceutical sector, which are performing quite well, where in Finland, since the start of 2022, there has been a decreasing economic activity. So there are some separators between the 4 Nordic countries, but the overall picture is that growth is now moving sideways, at least when we compare to the rebounds after the pandemic. Looking at the nominal wages and the central bank's forecast for this year, the nominal wages are in general expected to be above 3% in 2024, which again means that the real income growth scenario are now applied to all 4 Nordic regions. So purchasing power is indeed increasing across the region after 2 years with a fall in real wages. So the future looks better looked from a purchasing power perspective. Looking at the interest rates, we see that in 3 out of 4 Nordic countries, interest rates has again started to move downwards, and the fastest decrease is in Sweden. And we will come back to why the reason why it's why Sweden has the most, maybe you can call it offensive monetary policy, has a good cause. Norway again is lagging a little bit behind. Again, there are some things that separates the Norwegian economy from other Nordic economies, in particular as a net exporter of energy. We have benefited quite well from high energy prices, which again leaves us with a higher policy rate as it stands right now. but looking ahead, policy rates are in general expected to decrease further, which again means that we have a growth in real wages, and two, interest costs are about to go down in a highly indebted household sector across the Nordic region. So things do look better when we are looking ahead. And one thing is the cost side of the equation. A whole nother thing is the income side of the equation. In the Nordics in general, the main source of income is jobs. And when jobs market perform worse, the income side is affected relatively strong and relatively fast compared to the cost of living crisis. And indeed, employment has started to move up across the Nordic region, with the fastest movement up has been in Finland and Sweden. And those economies tend to have a higher unemployment rate compared to Denmark and Norway. But we see in Denmark and Norway as well, unemployments are moving upwards, but not at that fast a pace. And it's also an important distinction there when we come back to the debt collection numbers, that the increase in the Norwegian unemployment is mainly due to a strong supply side, which means that more people are entering the labor market, pushing unemployment rates up. Whereas in Finland and Sweden, unemployment rates are increasing because people lose their jobs. And that has some severe impact for the debt collection numbers, as we will see. And the reason is that people that goes from holding down a job with a regular income that goes over to unemployment, they usually drag a lot of credit with them, and that credit gets harder to pay once your main source of income disappears. So it's the main driver, you might say, behind the different debt collection numbers that I will show you in just a minute. Just also wants to take a quick look at consumer credit growth. Norwegian numbers are not included here, as we have a slightly different statistics, but in Norway it's about 2% annual growth in consumer credit, so it's not that fast a growth, and not so fast as the other Nordic countries, where consumer credit has have a higher growth rates in 2024, at least compared to 2023, with growth rates about 5%. And that means that more fresh credit are entering the market, and when credit or necessary but not a sufficient condition for a debt collection case is that someone gives credit in advance, and more credit is given, leaves more possibility for defaults going forward. And the increase in consumer credit, in particularly in Sweden, but also in Finland, are about to transmit into the debt collection numbers, and we do see some clear signs on that already. So if we want to sum up the macro environment in one slide, inflation is close to target in all four countries, with the Norwegian inflation lagging a little bit behind. Policy rates are already starting to go down in the Nordic region. Again, Norway is the only exception. Unemployment, since the cost of living crisis began in 2022, has indeed increased. But as I said, look out for Finland and Sweden with the highest unemployment growth, and where the unemployment growth is mainly due to more people losing their job, compared to Norway and Denmark, where the supply side of the labor market are decreasing in growth, but they are still growing, and that's a stark contradiction to the Swedish and Finnish labor market. Looking at consumer credit growth also, which plays a big part in debt collection numbers, we can see that the year-on-year growth in Sweden is about 6%. In Denmark, it's about 4%, and in Finland, it's about 5% annual growth. So consumer credit is indeed growing again, and that implies that debt collection numbers will follow. So let's take a closer look at the debt collection numbers. And as I already mentioned, unemployment is the main force. The gradual increase in costs most can adapt to. The fast and reduction in income due to unemployment is much harder to cope with financially without getting into payment problems. So if we start by looking at the overall debt collection numbers, in general, there has been an increase in debt collection cases in 2024 compared to 2023, with Denmark as the only exception. And again, if we look at the 2 years combined, we can see that the momentum is really standing out in Sweden, which had strong growth even in 2023, and that growth has continued in 2024. So Sweden is really the standout country looking at the number of debt collection cases. And that is pretty clear when we look at it from the start or Q1 in 2022. So during the cost of living increase and the level that the debt collection cases are currently on, we can see that Sweden has really risen to another level compared to the other Nordic countries. So the growth momentum is strongest in Sweden, and therefore it's also not surprising that the monetary policy is most on the offensive with interest rates cuts in Sweden as well. Inflation and interest rates, of course, drives the amounts that goes to collection up, and it drives it up with a time lag as well. And the time lag is due to that it takes some time for the inflation effects to move through the whole economy and on to debt collection numbers, because from the initial price increase, that bill has to be handed out and has to be not paid and then has to go to collection. So even if the inflation number still or looks a lot better now compared to a year ago, we are seeing the effects of the inflation numbers in our debt collection number as we speak. So here you can see the annual growth in the average principal amount to collection. And again, Sweden and Finland stands out with quite strong growth in the amounts to collection. More secured credit are going to collection because of the interest rates hikes, and people are not afford or are defaulting on their secured claims. And those secured claims has a much higher amount attached to them compared to average phone, electricity, public fees, etc., etc. So amounts are also going up across the Nordic region. So there are some clear signs there that the cost of living crisis did indeed generate payment problems, but not necessarily on a crisis level. So looking at the average principal amounts again, we can see that they beat inflation numbers, moving up at least 50% during the last almost the last 2 years. So the growth in amounts to collection is much faster compared to the average price growth or the inflation in the whole economy. So there are indeed some stressed households that are really struggling to pay their bills after 2 years of the cost of living crisis. So what lessons can be learned? Well, first lesson number 1 is that the cost burden presented by interest rates are much harder to cope with from a debt collection perspective compared to inflation. So when inflation started to rise, we didn't see that much effect on our debt collection numbers. But when interest rates started to move up to counter the increasing inflation, well, that put the cost burden on fewer individuals and with a higher price to pay, and thus sent more to collection. And lesson number 2, and that might be the most important lesson, is that unemployment dominates both inflation and interest rates when it comes to payment problems, which again leads us to conclude that it's really the income side of the individual household equation that needs to be looked closely at when looking at credit risk. And there is indeed a time lag between the real economy on the one side and payment problem of the other. So one should expect debt collection numbers to go up for quite some months yet, even if we look further ahead and we look at the economy now, things are indeed looking better for the vast majority of households. The cost of the effects of the cost of living crisis are not yet over, looking from a debt collection perspective. And the amounts to collection are much more worrying than the number of cases. Amounts grow much faster than the number of cases in general. And from middle of next year, we should start to see the effect of higher real income, which again leads to a better ability to pay. And what stems from the 2 lessons above is that you have to look out for surprises in the labor market if indeed unemployment start to move upwards because people are losing their jobs after 2 years of struggles with higher cost of living. The road to debt collection will likely be shorter than before. Moving on then to business payments, and we do see an increase in late payments here as well, but we also see that again normality resumes, one might say, in that bankruptcies and business credit risks are following the overall economic activity as the government has backed off again from interfering in private sector credit. So let's start by looking at the bankruptcy numbers that will get up to speed. And you can really divide the last 4 years into 3 different time periods, one might say. First, we had the pandemic. Bankruptcies in general decreased overall in the Nordic region, even if the annual numbers vary a lot. The country numbers do vary, but the overall trend is a decrease in bankruptcies during the pandemic. And the main reason for that, of course, is public support provided by taxpayers. Then we had the 2022 and 23 public support was reduced and fully withdrawn. And when you don't longer have public sector securing private enterprises, well, then bankruptcy numbers are bound to go up again. And then in 2024, the cost increase are really starting to make an impact on the bankruptcy numbers. And we do see again that in general, bankruptcy numbers following the overall economic activity. And I mentioned at the start that Denmark had the best GDP growth. Well, they also have the best development in the number of bankruptcies in 2024. Looking at the debt collection cases then, with the exception of Denmark, again, we see quite a similar picture that we saw on the bankruptcy data. And those 2 numbers are, of course, collected because debt collection is necessary but not a sufficient condition for bankruptcies. And we see that the debt collection numbers in both Norway and Sweden and Finland, when it comes to number of debt collection cases, are indeed growing in 2024, and they are growing in 2024 of the back of a strong growth in 2023 in both Norway, Sweden, and especially Finland as well. So the debt collection numbers do correlate with the bankruptcy numbers overall. Looking at the average amount to collection, well, there's a more mixed picture here, we might say, but on the broad Nordic, from a broad Nordic perspective, amounts do increase, but not as fast as one might expect. So if you start by looking at the average amount in Norway, they increased both in 2023 and 2024. In Sweden, there was around zero growth in the average amount in 2023, and a growth of about 5% in 2024. Denmark had a large growth in 2023 and has fallen back a little in this year, and Finland numbers are moving up as well. So there's sort of a mixed picture on the amounts, but on the cases we see that they correspond quite well with the overall bankruptcy numbers. So, and with that, I just want to have a quick look at the correlation again between the number of bankruptcies and the GDP growth. So here on the left-hand side, you have the GDP numbers, but look out, there is an inverse scale. So that means that the lower the number, the higher the economic growth is on your left-hand side on the pink line there. On the right-hand side, we have the number of bankruptcy, and here the scale are perfectly normal, which means that a higher number is higher in the chart. And what I want you to pay attention to is the correlation over time between GDP numbers and bankruptcy numbers, and they tend to move quite correlated. And that means higher economic activity leads to less bankruptcies, and less economic activity leads to more bankruptcies. So when the economy, economic growth are fading, we do expect bankruptcies to follow in that direction. And again, the shaded area here, just on a side note, is the only time period where those two do not correlate, and that is of course due to public support during the pandemic, but normality is again resumed in all 4 Nordic countries. So a quick outlook or maybe a summary, call it what you want. We see a general increase in late payments across the Nordic region. Sweden is really the standout country when it comes to late payments, especially on the household side, where we see quite strong growth in late payments in Sweden, and also compared to the other Nordic countries. And the growth in Sweden and Finland as well underlies the importance of unemployment, and that unemployment plays a key part in explaining the debt collection numbers. And the income side of the equation, meaning jobs in the Nordic region, are the key part of a household budget to avoid payment problems. GDP numbers are again the key explanatory factor for late business payments and bankruptcies. And the timeline, again, I want to stress the importance of that even if the overall economic performance, especially for household, are looking better, it will take some time before it transmits into the debt collection numbers. And if we are, as forecasted, have a soft landing ahead of us, well, then growth momentum in late payments will likely resume during 2025. So that's it from me, Stian.
Thank you, Morten. So listening to you, I guess your messages can be framed in different ways, and you pointed out a soft landing, but if you kind of be a little more pessimistic, it can also feel slightly as a house of cards with unemployment as the key risk factor here.
Yeah, definitely. And those sort of things also tend to have their own momentum. So there's definitely growth momentum in the labor market in terms of that the unemployments are rising across the regions, and employment is down, or the growth in new jobs are down, but are staying positive on the positive side of zero in Norway and Denmark. But it's labor market looks more and more shaky, and not at least due to wage increases this year and the expected wage increases next year. So that if wages kills employment, which is the union's biggest dilemma every year, could that happen? Well, of course it could. And when you come of the back of 2.5 years with a real struggle to pay your bills on time, there's not that much of room to maneuver in, both on the buffer side. The buffers has been drawn on, and there's also much less room to take up new credit to kind of have a more active management during maybe the 3 to 6 months while you look for a new job. So there are reasons to be worried, and I think it's particularly important to watch out for the unemployment going forward, and at least, and most importantly, the causes of unemployment. Are people losing their jobs, or are people entering the labor market? It's a big difference.
Thank you so much. So, soft landing or a shaky house of cards. I guess, thank you, Morten, anyhow, for pointing out both the differences and similarities across the Nordic countries. And then I guess only the future will tell if the White House will have similarities with the US television series for the next 4 years. Anyhow, we will be back to update you. Thank you for watching.